Dr. Alimi, good morning. I know you're also excited about Dangote petrol in circulation. I believe you are also looking forward to heading to a petrol station and having access to at least steady supply of petrol.
Of course, every Nigerian will be excited at this news. It's wonderful news, and like the president of the organization said, we look forward to having it in our various petrol stations in the next few days.
Yes, we're still talking to the CEO of the Chartered Institute right here of Directors, Institute of Directors, and we're talking about the 70% windfall tax, which has now been signed into law. Dr. Alimi, obviously, because this is going to take out of your revenue or your profits or the bank's profit, it's not received pleasantly. But I guess we should also look at why this was proposed in the first place and perhaps try to balance out perspectives in this case.
Yes, you are quite right. Of course, it is the role and right of government to introduce tax where it deems necessary, especially where they feel a particular sector should contribute more to the development of the economy. The government has the right. And when you look at where we are now with our economy, the government, of course, is holding on to every opportunity to improve revenue generation. So you can't blame the government for doing it. But in that same instance, as we yes, affirm that government has the right, we must also look at ensuring that we also do not kill the goose that lays the golden egg. And that is what the Institute is saying here, that yes, as we hold on to every available opportunity, we must also look beyond the immediate gain and also look at the long-term effect on whatever policy that is in place on the sector. And we need to be extremely careful. You don't want to, on one hand, we are trying to attract investment to the country. One of the areas where investment can come in through is through the banking sector. We must not put in a policy that will discourage from investing. You must not put in a policy that will discourage that sector from lending into an economy that needs funding. So that is what we are saying. Every time we must try to balance the equation, just like you said, and ensure that whatever policy we are putting in place is not one that will, at the end of the day,
All right, seems we have a break in the network now there with Dr. Alimi. Dr. Alimi was trying to say that perhaps the government... Dr. Alimi, are you back? Okay, do you want to conclude your thoughts, please?
Yes, I think I've completed. I just said, sorry, I think there is a little glitch. I said, at the end of the day, government must kind of balance its act to ensure that whatever we do that gives us gain in the short term should also be sustainable in the midterm and the long term for both government and the private sector.
So what would you rather, or how would you rather that the government handles this? We're just talking about the debts that the government owes. And obviously the government is looking for ways, to scratch out revenue, fund the budget and some other infrastructure. So how would you suggest that the government handles this?
Yes, while I understand the position of government, and it's like, well, we are not drowning, but when a man is drowning, he holds on to everything that can possibly make him survive. But it is not everything that is holding on to that will make him survive. So what we're saying here is that government should look at that rate, 70%. I mean, well, let's look at, we are not the only country that has introduced this kind of law. What are the other countries doing? One. Two, what is the prevailing business environment around the financial sector that would help banks to actually meet that obligation? Is it conducive? Government needs to look at that. So what we are saying is that it is not just enough to introduce this policy. It is also good enough to carry along that sector. You don't want to kill that sector because, of course, we want to provide revenue for government. It is important that that sector continues to be relevant and continues to play the role it is currently playing. So our proposal is that government should try and reduce that tax rate, even if it is a gradual thing, and make possible introduce some kind of threshold that would because government could say, okay, if you make below this particular amount in terms of the windfall from forex deals, this tax may not apply to you. So that, because the banks are of different sizes and the volume of transaction differs. It's not even about the size of the bank, but the volume of the transaction. So government could look at that so that at the end of the day, we do not kill the banks in our effort to raise funds. And again, of course, this is the time that banks are recapitalizing. That also has effect on the bottom line of the bank. Banks are recapitalizing. You cannot, on one hand, tell them to raise funds. On the other hand, you are also pulling out the carpet from under their feet. So this is what we are saying. And there is also a need to also conduct an impact assessment. Okay, so you have said this tax will apply retroactively, which to us is a very wrong move. Banks at the moment, at least, have submitted their accounts. They have paid dividends based on some of the windfall they have had. Now we are saying we should go back and bring back that money. To me, any retroactive law is not right. Any retroactive law is not right. And we believe that government should ensure that whatever they are doing, they can also offer incentives such that some of that windfall, if the banks will use it for maybe financial inclusion, opening up new branches, opening up rural areas, it could be incentives. You will recall that one of the reasons why people are given for lack of tax compliance is the fact that they do not believe in government's ability to use tax appropriately, which led to allowing some organizations to utilize the tax directly to fund some public sector projects. Is it possible that banks could also be given that opportunity such that they can apply what should come through this kind of taxation into public utilities and public infrastructure, that they can use the confidence of the private sector in government ability to use the tax appropriately.
All right, Dr. Alimi, we really have to stop there. Director General, Chief Executive Officer of Chartered Institute of Directors of Nigeria. We hear your suggestions, and of course, we're going to share this as many times as possible and see if we can get the ears of the government on this 70% banks windfall tax. Thank you so much for your time, and we wish you the best.
Thank you very much. Have a wonderful day.